What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief Show. Today's video, it's going to be shorter than usual. I didn't put one out yesterday, and I'm not going on camera doing anything extended today. I'm just going to look at some key levels. I've been busy this last previous week and these last couple of days, as well as just the next couple of days. I'll be a little bit busy as well before I get to more in-depth videos again. It's me and my wife's anniversary, so I've been planning some stuff, working some things out, and it's just been taking up some of my time with some stuff going on at home. But I still want to get out some key important levels to you. So let's just go ahead and hop right into today's show. All right, welcome back. So we're going to first start off just looking at the dashboard. This is the 11 sectors that make up the S&P 500. This is today's price action. And what I want you to take note here and keep in mind that we have a weird week ahead, right? We have the FOMC tomorrow, right? The press conferences. Are they going to make changes? Probably not, but who knows, right? And then second, we have all these really monster tech earnings. So a lot of these key levels can be shaken, broken. We just want to be aware of what's going on. And, when we get into the charts, you'll kind of realize like, okay, it's these type of environments, it's not the best time to start pressing extremely hard. We don't know if it's going to be a sell-on news event or if we're going to just rip higher. The context of most of these charts suggests that we're going higher. But there are a couple of just interesting things taking place. So first to note, look at the top sectors: utilities, real estate, healthcare, consumer staples. Pretty much all defensive sectors. All right, and then you look at what's taking place in the bond market. Right, we're just looking at the TLH. This is the 10 to 20 year Treasury bond ETF. And like this was a pretty just nasty looking bearish candle, right? This big red one that gapped up and then engulfed the previous trading candle. And at that point, everyone was kind of thinking, okay, well, this is bonds there, the yields are probably bottoming out right now and we might start to see them rise and we'll see that reflation trade. And a lot of people still believe that, but I mean, we're just looking here at the 10 to 20 year Treasury bond ETF. And I mean, it's to me, this just says, hey, be careful here because this is not, I guess the easiest way to say it is this isn't good for growth to see the bonds rise like this and the 10-year yield continue to kind of just roll itself over and continue to head lower. I don't know how long is that going to last or if it's just kind of bottoming out before it starts changing path. Maybe it starts changing after the FOMC comes out, but we'll see. But as it stands right now, this tells me, okay, there's this risk off environment taking place where we're seeing decent strength holding up in the dollar, and we're seeing bonds continue to hold at key levels here too as well. All right, so let's just hop into the banks really quick. Financial sector, you can see they haven't gone anywhere for a few trading sessions, just really going sideways. If you look at the S&P 500 on the daily time frame, look like a pretty gnarly day-to-day to the downside. If you're on my Discord group, we did place a pretty successful trade where it was a short-term, high-risk lotto type trade on the SPY, and we caught some move to the downside, resulting in, like a 30 to 50% gain. I never risk too much money doing that kind of stuff just because they are very high risk. But we got to catch that, and good thing that we got out because look at the market bounced right back, created a little bit of a hammer candle right here. So we'll see what takes place tomorrow here. We're going to go into the 15-minute time frame, look at some key levels. I'd be looking at the previous all-time high as an area of resistance as well as this gap. Clearly we gapped down, we headed lower, we found support at the 5-day moving average. Now I was looking to go long. All right, I posted that out on the Discord. I said, okay, this is my key levels, the 435-ish range to 436. It was just a little bit below that. And we didn't quite reach it. We got to 435.99, and I did not tick that. I was thinking that we might get a little bit more into here, but it clearly came down to try to fill that gap. And then it ramped up higher, running away from the position that I wanted to take. So, hey, perhaps we get that back test tomorrow, but I'm going to play it day by day. I don't know if I'm just going to hop in right here if it starts cracking this low, but we'll see here what price action decides to do with all these big earnings. We have the PMO here on the 15-minute time frame also crossing over to bullish. As it stands right now, this area is our area of support, so 435 to 436, and our area of resistance to keep an eye on is a 441 and the gap fill zone up here, 440 to 441. Okay, let's look at the Dow Jones Industrials. Also, very scary looking day, but when you zoom out, it's all in bullish context, so don't go crazy thinking that the world's falling apart here. Because, well, I mean, it has a lot of work to do in order to really, really shake the tree, I guess you can say. We're above the 20-day, above the 50, above the 100, above the 200-day, and we're still struggling to break above this previous all-time high right here, or this area of resistance, I should say. So be on the lookout for that, because this sideways consolidation, that's not a bad thing. That's actually a good thing if it continues to kind of just build sideways and create a little bit of a launch pad and starts to head higher. If you look at the 15-minute time frame, the resistance is going to be 351.50 right up overhead, where we also fill that gap and take out this previous high right here. The PMO did cross over to bullish, so that's a good sign. It's just below zero. That's okay. We'll see what takes place here. I mean, we might get a gap up, we might get a gap down. I don't know. The market's going to probably really swing all crazily going into tomorrow, so just be mindful of that, when we're reporting all these big earnings. But we are above the 5-day inclining moving average, so that is a good sign there. If you look at the NDX did crack down through this resistance. We went to back test it, went for it today, and this was a pretty large range candle, so a lot of volatility here. But we did find support right at the 20-day moving average and started to head higher. So what do we want to keep an eye out? Well, if we get a big move to the downside, this area would be the one that I want to hedge along in. Perhaps even at the lower Bollinger Band and this previous low right here. If we don't crack through that, that would be an area to consider as well, putting on a long going into just this earnings season's taking place right now. So I feel like that would be a good area of support. Being that the whole entire NDX, the NASDAQ 100, is in very bullish context here. If you look at the Qs on the 15-minute time frame, another area that I was looking to get long in did not reach it. It didn't hit it by about 16 cents, which is quite frustrating, but you need to be just, I guess, very tactical when it comes to your positioning. I don't like chasing things. I like to wait. I like to be patient. And I was really contemplating getting in around here, but I didn't. It didn't hit my target zone that I planned for, and it ran away from me again. So 2 strikes. PMO did cross over, and we're back within this previous area that is resistance. So be mindful of that. We close. Look at this. Just look how just like an algorithm, just massive algorithm selling, hitting it down, and then we come right back and close right on the 5-day moving average, back into this area of previous support and resistance. So where can we go from here? 365.50 is our area of resistance. 369 up ahead is another area of resistance to be mindful for. And then we have our support zone right down here at this previous swing low, as well as this volume shelf, this volume profile right here that I drew out, 358.50 to around 359.50. IWM, this is still one that you want to be very, very careful with. A lot of people are getting bullish small caps, and I understand why that might be the case. Just understand from a volatility standpoint, it's not looking all too great, especially when you start looking at the other indices. So just be very careful trading the small caps. And what I mean by careful is I'm not really trying to be a bearish or bullish bias. What I'm trying to say is when you enter into a small cap trade, before you get into it, have a defined strategy and risk to reward setup before getting into it. Okay, so if you see a setup where you can risk 1 unit to potentially earn 2 or 3 units, and it makes sense from a charting perspective, then go ahead and do it. That is totally fine. Just be mindful that there's going to be a lot of setups. There's a lot of attention and a lot of eyeballs on big tech. So to focus on various small caps that aren't getting attention during this specific week, you might just have a lot of swings and a lot of misses. Maybe, right? I mean, I always keep my eye on some of these small caps because when they run, they do run. But just like I said, we have a lot of attention going on to the big cap names, so be mindful during this week. IWM on the 15-minute time frame. Key level was 216 that we were watching. It did break down temporarily, but 216 did hold. 216 is a little bit lower. It's right here. So that little zone here did hold, and we got back above this. So that is not a bad sign. Keep in mind that 220 would be a gap fill. So if we go take that, look for that as an area of resistance, as well as this 222 range. As far as support goes, if we start breaking down, the next area of support is going to be around 209 to 210. Now, if we start taking that out, then we have some trouble. Now, take note, this crack, this little crack right here, this 216 where we touched down, look where that is on the daily time frame. Bam, right back on this trend line. So that is still holding. Now, this could be potentially, right, a low, it bounced, a lower low, it bounced, a lower low again. But this bounce, if this bounce continues, well, guess what? Then we might be putting in a higher low from a bullish perspective. Keep in mind, we're still below all the moving averages, so there's a lot of work to do here. Keep also in mind that this maybe could be turning into a inverse head and shoulders, where you have a left shoulder here, you have the head, and then you have a right shoulder building out. But in order to be confirmed, we would need to get above these moving averages and above this previous swing high, which is around 227.50. All right, everybody, that's all I have for you on today's episode. We went over the indices and we went over some key levels. Also to note, like I said, just be very mindful, very careful, and very tactical when you're trading during this week. Not only do we have the FOMC tomorrow, we have big earnings, after hours. I think we have some pre-market, but I think the bigger ones like Facebook is after. I can't quite remember, so don't quote me on that. But just be very mindful that there's going to be a lot of shakeups this week. All right? That's all I got for you on today's episode. Everybody have a wonderful